How are we doing, everyone? Welcome back to the channel, and if you're new, welcome. So today I just wanted to make a video on trending markets and how we can actually take advantage of trending markets and how we can find trading opportunities within the trending market to increase our probabilities when taking trades. So of course, when we're trading the trend, it will always increase our probabilities. I used to, in my past experience, I'd always try and pick the tops, pick the bottoms, but what it always ended up leading to was getting stopped out and price continuing in the trend direction. So let's take a look at this chart. We're taking a look at pound Australian dollar on the 1 hour time frame, and then we're going to be taking a look at gold spot USD on the 15-minute time frame, because I want to show you guys that structure really is structure no matter what the time frame, whether it's the 5 minutes, the 4 hour, or the daily. Structure and price action remains the same. So let's jump straight into it. We're taking a look at the downtrend example, right? So we can clearly see that price is trending down. Why? Because we can see price making lower highs and we can see price making lower lows, okay? And we can clearly see here that this structure, this push phase, has broken previous uptrending structure, which again is another indication to us that price is trending down, and we've also failed to make new higher highs. So when we're trading the downtrend, we want to make sure that we are entering at the end of the exhaust, okay? So just to show you guys, a lot of people, what they will do, or a lot of traders, they will enter at this area in the push phase, price will pull back, they'll get stopped out, then price will continue. Where we want to be entering is, we want to be entering at the end of the exhaust, which is the lower high as part of bearish structure. So we can clearly see here that price made a lower low. We're now expecting price to pull back and create a lower high, but we need to be able to identify the end of the exhaustion. And a little tip for you guys is we can either expect price to come back to the previous lower high in the downtrend, or we can expect price to come back to the previous lower low in the downtrend, or just area where there's multiple wick projections on the previous structure. So what we want to do is just wait for price to pull back, okay? As long as price is respecting the previous lower high, we can continue looking for sells, okay? So what we're doing is we're just waiting for price to pull back. We're waiting for price to show us wick rejections and to indicate to us that this has created a new structural lower high. And this is what we're starting to see in this area here, okay? We can see that price has now made multiple wick rejections. We have pulled back and we're starting to see some bearish sentiment. So what we can do is we can actually mark this as a key level, okay? Price create that lower low, price is pulling back, we're seeing multiple wick rejections, we're seeing the bullish candle starting to depreciate, and what we're identifying is these wick rejections are basically telling us that price is failing to go any higher. And our next confluence, we need to basically look for momentum shifting candles. We need to identify price continuing and showing us that the sentiment is still there to continue looking for sells in the trend. So what we want to do is we want to be patient. Again, trading is a lot about patience and just waiting to identify the confirmations, okay? And this is exactly what we want to be looking for. We see that prices basically create that push phase. We've created that exhaustion. And we can now see that price is starting to continue pushing down. This is a lower high as part of bearish structure. We have got multiple wick rejections in the area, which is indicating to us price failing to break back through and that the sellers are in control. And what we can finally see is a strong momentum shifting candle, which is basically indicating to us that the trend is going to continue and that the sentiment is still there, okay? And what can we do? We can simply take the trade. What you want to make sure is that your stop loss is way above structure and above recent wick rejections, and then going for your take profit levels. I like to trade a 1 to 2. That's just how my strategy requires me to trade. And what we can do is just simply play out the trade. And as you can see, this is how it played out. Price continued, price respected previous lower highs. We made lower lows, we pulled back, made a lower high. We saw multiple wick rejections. We saw momentum shifting candles. We then took the trade. Okay, so I said to you guys that I'll be showing you guys an example on the uptrend on the gold spot USD on the 15-minute time frames, just so I can prove to you guys that structure is structure no matter what the time frame. So what can we see here? Price is clearly trending up. Why? Because we see new higher highs being made. We're seeing higher lows, and we're seeing that this previous higher high is breaking recent bullish structure, which again is indicating to us strong bullish sentiment, okay? But what do we want to do? We want to wait for price to pull back and then look for our entry positions. Entering right here, we could have had an entry here as price pulled back to the previous high low, but let's say we've missed that. What you want to do is we don't want to be buying here, as this is technically in a push phase. we want to be waiting for price to pull back and show exhaustions, okay? And as long as price breaks the previous higher high in an uptrend, we can continue looking for buys. And I forgot to say, if price is continuing to break lower lows, we can continue looking for sales in a downtrend. So what do we want to do? We just want to wait for price to push up and then pull back to enter at the end of the exhaustion. And again, where we can be entering on the uptrend is we can either enter on the higher high as a key level, or we want to make sure that price is not breaking the previous higher low. So we can either enter, or we can either wait for price to pull back to these sort of areas or this sort of area, okay? But just identify where price is basically creating wick rejections and losing momentum when pulling back, right? So let's just wait and identify price coming down and identifying the end of our exhaustion. Okay, and it's going to look something like this. You guys need to understand that it's not always going to look like this. The principles stay the same though. You want to be identifying the exhaustion phase. You want to be basically seeing price pushing. We've identified a trend, price pushing, breaking previous highs, and then price just pulling back and creating that exhaustion. Price can either pull back to the recent higher high, it can pull back to recent wick rejections, but just identify basically where price is now losing momentum and starting to turn inside out and basically continuing. What we can do once we see these start seeing wick rejections, we can basically draw a key level for price to remain above, and if price does break through this level, we can then maybe look for price to come back to here. But if price then breaks this level, then the trade will, or the trend will start to become invalid, and if we're failing to see higher highs, the trend will also be invalid. So what do we want to do now? We've seen that price has pulled back. We can see that price is clearly trending up. We can see that price is creating multiple wick rejections, but what we want to do now is we want to look for bullish momentum candles, okay? We want to be identifying strong candles which will indicate to us that this sentiment is still there, and this is exactly what we want to be seeing, okay? Again, like I said, it's not always going to look like this, but what the principles are, you want to wait to identify a trend. You want to identify price pulling back to either the recent key level structures, and then you want to be identifying wick rejections. You want to be seeing where price is failing to go any lower in this example, or in a downtrend push any higher like we previously saw. And then we want to be finally identifying strong momentum candles, and then we can have our stop loss just below the wicks or below the key level, going through your take profit levels, and then we can take the trade, okay? Because we're trading with the trend, right? We're not trying to fight it. We're trading where the market is showing us where it wants to go. We see that price has pulled back. We see multiple wick rejections. We see the momentum shifting, which is indicating to us that the trend is potentially going to continue. I hope you guys enjoyed this one. If you did, please leave me a comment, leave me a like so I know you guys are enjoying this. But I hope it brought you guys some value, and I'll see you lot all in the next one.